Welcome back. Now, Absa's Purchasing Managers Index survey has shown some improvement in South Africa's business activity. However, the seasonally adjusted PMI decreased to 43.1 in May from 44.7 points in April. Absa CIB Sello Sekele joins us now with more insights on that. Thank you so much for your time, Sello. Now, 7th consecutive month of contraction in the PMI. Is the manufacturing sector in South Africa in crisis?
I wouldn't use the word crisis, but definitely business conditions in the manufacturing sector are quite challenging. As you've already said, I mean, the PMI fell to levels that we last saw in 2020 at the height of COVID. So it just shows, the kind of weak activity that we're seeing in the sector.
It's actually quite interesting and really just showing you the weight of that pressure on the manufacturing sector if it is at the same levels that we last saw in the height of COVID. Talk to me about the main pressure points here and maybe particularly drilling into export sales.
Yeah, so the main pressure this time around comes from an index which measures supply delivery times. So we saw that index declining quite notably. So to us, it shows two things. It shows that because in recent months, the index has been quite high, even when activity has been weak. So to us, it shows that, logistical bottlenecks are easing. And then two, it shows that with weak demand and activity in general in the sector, there isn't much to transport in the sector. So I think that's where the main pressure point is.
Yeah, there isn't much to transport, and that would be exports and domestically?
Yeah, so according to the new sales orders index, and then when you hear comments from the manufacturers themselves, it looks like it's both domestic and external led demand pressures.
So is this also still to do with the tariffs? Because it's quite interesting that the tariff pressure was really in April, and that's when Liberation Day came in on the 2nd of April. But I mean, now this was for May, and actually this was after we had gotten announcements from Donald Trump that he has paused on some of those tariffs, seeming that there would be negotiations put on the table between the US and some of the countries. Are we still seeing that pressure of the tariff uncertainty here? What exactly are we seeing?
Yeah, so if you think about how, for example, things like contracts work, we'll see the effect of tariffs for quite some time coming in with a lag because of how contracts work, right? So as contracts, need to be renewed, I think that's where we're going to see, the effect of tariffs. So right now, the situation is quite uncertain, but yeah, I do think that we're still seeing the effect of the notable tariff hikes. Although, at least right now, we are in that 90-day period where most of the tariffs are around 10% from 30%. So we will continue to see the effects of those sort of announcements still come through the sector.
Is there still no significant relief in terms of domestic demand, even though we've had some tailwinds? For example, the fact that the VAT hike was reversed, and I know obviously this is still new, but also we have had another interest rate cut from the South African Reserve Bank. Is there still no relief domestically?
Yeah, so in terms of the VAT or the proposed VAT increase, what that does is that it actually doesn't change a lot because, it's not like when it's removed, then you're going to get money back. It just basically means that what you were going to lose, you're no longer going to lose, right? And then in terms of interest rates, the way interest rates work, they take time to fully show up in the economy. We call it the shower effect in economic terms. So yeah, it will take some time for us to fully feel the cuts that we've seen recently come through to economic activity.
In terms of the purchasing price index, that has decreased. Of course, that has to do with softer inflation. I mean, just talking about the budget, we did get a hike in the fuel levy. What do you expect the impact of that to be on that particular index?
So in terms of price pressures, actually, that's one of the good news that we saw in this not so encouraging PMI print. We saw prices come down, and we believe that it's mainly as a result of the fuel price cuts that we saw recently. But going forward, it's quite uncertain, especially given the fuel levy increase that's going to be effective, I think, from May. But there are other factors, that are quite supportive to input costs, like the strengthening rand, right? So as Absa, we expect the rand to end the year at 1750. And when you look at the Brent crude oil price, like most commodity prices, it has been quite subdued. So it looks like the Brent crude oil price could also be supportive to input costs going forward.
There's been significant upward momentum on the index tracking expected business conditions. What exactly does that signal? Because I mean, this is quite good. Does it signal that manufacturers are actually shrugging off the current pressure and actually saying that in the next few months they expect things to get significantly better?
Yeah, so, if we take a step back, right, and look at the recent announcements that have been coming through on the policy side, I think they've been quite positive with the second phase of Operation Vulindlela now being launched. With some pronouncements, for example, from Infrastructure SA saying, look, we'll help the 3 municipalities that are struggling. I know it's just 3 out of 257 municipalities, but it's quite signaling, right, in terms of the direction that South Africa is taking in terms of structural reform. So I think manufacturers are aware of that, and they can see that, yes, we still have load shedding, but it's significantly lower than what we had before. Transnet, there's still a long way to go, but there is some improvement there. So they do, recognize that, yes, right now we're facing headwinds, but structural reforms could lift to the lower cost of doing business going forward, and therefore more confidence and more growth.
Yeah, all right. And just lastly, as we wrap up the conversation, as much as there does seem to be a little bit of optimism baked into business conditions in the next few months, with all of this still employment, 14th consecutive months of contraction, can we still expect significant pressure to continue on that front, Sello?
Yeah, so for you to see the employment index really starting to tick up, you need to see a consistent positive outcomes in terms of activity in the sector. I mean, if you look at Q1, there were job losses in the sector. And it's not surprising when you look at the output data in the sector for Q1, where it was down by about 2%. So you need, a strong economic activity so that businesses, can start, increasing their payrolls.
All right. Well, thank you so much for your time and for your insights there. That was Sello Sekele, economist at Absa CIB.